So we all have had a checking or savings account at our local bank, but one thing I've always wondered is how exactly do banks make money from just holding on to our money? Well, that's the thing, they don't just hold on to our money, and here's how it works. So banks actually make money in many different ways, but by far the majority of their profit comes from interest, which is the price that they charge for those who borrow money from them. Which is exactly why I say that banks don't just hold on to our money, because many of us don't even realize it, but the bank actually takes money that we deposit into our accounts and lends it out to businesses and other people for things like mortgages, auto loans, personal loans, etc. Well, if that's the case and banks are just lending out our money, then how are we able to just withdraw it whenever we need to? Well, banks are still required to keep a certain amount of cash on hand, and this is to make sure that they still have enough to meet everyday withdrawals for their customers. So yes, banks are useful and we all use them, but don't forget that just like every other company, they're a business and they gotta make their money somehow.